Hello and welcome to Crux Investor. We spoke earlier today to Garett Macdonald, who's the CEO of Maritime Resources, a TSX-V listed gold explorer with assets in Newfoundland. Market seems to have got quite excited about their story recently. And if you want our view on that story and the conversation with Garett, you can get that at cruxinvestor.com/club, along with company reports, training courses, commentary from market experts from all around the world, and also a thriving community of investors sharing ideas and thoughts. And if you go there now, you'll get a 7-day free trial. And we'd love your feedback too. So do hit the like button and leave a comment. And if you look in the description below, you can look at some of the topics we discussed. Anything interests you in particular, click the number beside that topic. It's called a timestamp. I'll jump you through to that part of the interview. And if I could ask that you click the subscription button to subscribe to our YouTube channel. And of course, for more videos like this one, click the notification bell. Garett, how are you doing, sir?
I'm doing well. How are you?
Yeah, not too bad. Not too bad. Thanks for joining us. Excited to hear your story. So where in the world are you?
Yeah, I'm down near London, Ontario, which is about 2 hours southwest of Toronto.
There you go. We're twinned with London, England. Maybe.
Yeah, smaller London for sure. We're kind of working remotely for now, in and out of the city as we need to. But yeah, a little different with this COVID thing going on. But we're still able to get things done.
Yeah, well, that's good. Do you think you'll stick with it in the long run? Is that a plan?
Probably a hybrid of it. I don't think we go back to the way it was. I think we've certainly seen how effectively and efficiently we're able to work remotely. So I think the old ways maybe were a little bit too much. We've been certainly proven we can do things differently. So
that's fantastic. And I think shareholders want
to go back to the way it was.
Well, I kind of hope you're right, because I think shareholders want, instead of those airplane trips, I guess they want to see, drilling going on. What can you do with $10,000 drilling? I guess it could be quite exciting in your case. Well, look, it's new story to us. First time we've spoken or met. It'd be great to kind of get that 1-minute overview of the business, and I'll pick it up from there.
Yeah, sure. So Maritime Resources, so we're listed on the TSX-V. Our focus is gold, and we have singular focus is Newfoundland and Labrador. So we have the Hammerdown gold project. That's our key asset. It's a former high-grade producing mine. It was operated by Richmont for 4 years in the early 2000s. So we're looking to restart that mine, and we're potential around the mine, as well as the our new project called Whisker Valley, just located north of Hammerdown.
Right. Okay. Thanks for that. I'm just trying to, because again, it's a new story to me. I'm trying to work out what I'm buying into here. Okay. So perhaps we can talk about your business plan. Okay. And the business model, for that matter. In fact, so what is it that you're trying to be? And I get that you've basically got this Hammerdown project, Richmond Mine's old asset, but what are you trying to do with it? Yeah.
The overall business plan for the company is to get into production and to explore for new resources. So it was about 18 months ago that the new team came into Maritime, backed by Dundee Goodman Merchant Partners, Sprott, and 1832 Asset Management. Those were our three main shareholders. The idea was that we were hopefully going to be able to bring the Hammerdown mine back into production during this high gold price cycle that we're in, using existing facilities that are in the area. So there's a process plant at the Nugget Pond metallurgical facility that we might be able to use. It's the former plant that actually processed all the ore from Hammerdown when it was running before, and it's sitting there idle. So really we're looking at a low capital, high grade, high margin startup, roughly around 70,000 ounces a year from a high grade deposit that was already mined once before. So it's a well-known entity. It's a very clean milling ore, high grade, narrow veins. That's the business plan to get started. We ultimately would like to get up to 100,000 ounces a year or more. We see that potential in Newfoundland, but to start with, we're looking at that 70,000 ounce starter mine at Hammerdown.
Okay, so what gave you the confidence that you could go back in here and do that? I mean, what data have you inherited? And in fact, how did you actually come across this project?
So Maritime has owned this asset for over 10 years. And I guess in the last probably 2 or 3 years, there's been a lot of a lot more drilling, a lot more interest in the project. So when we came in about a year and a half ago, started with an infill program, updated the resource. We looked at a new mine plan, came out with a new PEA study in February with some really attractive economics. At $1,375 per ounce gold, we were looking at $111 million NPV, 50% IRR after tax. So as a scoping study, it looked good. Gave us the confidence that we could move on to the next step. So we're doing some more work now, more de-risking, more technical work, drilling, to come up with a new resource and a new mine plan again, just to tighten things up even further as we go into feasibility. So what we noticed on it though is when Richmont was mining here, they were mining with a cutoff grade of around 8 to 9 grams cutoff grade in this kind of gold price. Their average grade at the time was around 16 grams, so very high grade mine. And Richmont was really not that well known for exploration. They were well known for underground mining, which they were very good at. And what we found through the core and the historic drilling is that they didn't sample outside of the main veins that they were mining. So we started looking at it. We started to see grades in the 3 to 4. This would not be considered ore to them back then, but for us, in this kind of price environment, certainly it is. So we saw that potential. We saw the potential to start with an open pit versus underground right away, using the facilities that are in the area to keep the capital costs down. And basically that gives us a starter project to work from, and we can use the cash flow from that to kind of bootstrap ourselves up into 100,000 ounce.
Okay, so let's come on to that in a sec. Just explain to me something you said. You said Maritime have had this asset for 10 years and you came in a year and a half ago. What was the history there? Where have you guys come in from?
Myself, I'm a mining engineer. So my background, I was with JDS Energy and Mining. I was a VP of project development. The main work that I did was focused on Dalradian in Northern Ireland. So I led the feasibility study on that one. And that's really what got me interested in this one, because we did hear about a project in Newfoundland that looked a lot like Dalradian, at least geologically. Smaller resource at 1 million ounces compared to the 5 or 6 million ounces that they have. But when I went to check it out, it looked very similar. High grade, narrow veins, and wide open for exploration as well. So I came in about a year and a half ago. We started building up the team. We just announced a new vice president of environment and sustainability from Kirkland Lake Gold that joined us, Perry Blanchard. And we also brought on an advisor to the company, as well as the COO of Dalradian currently, Eric Tremblay. So we started to notice there was a lot of potential here that needed to be fleshed out. We really spent the last year and a half just doing the work, getting the resource tightened up through the drilling, technical programs, environmental programs, community relations, getting the whole package together to be ready to go to that next step for feasibility.
Right. Do you feel that this project's, I know you talked about reasonably good returns at 13.75, not until a year ago, the price of gold was sitting at about 12.50 for a long period of time. We're thereabouts. Projects like these only get going in a high gold environment. So what level of confidence do you have about this bull market that we're in at the moment?
Well, you know what? It's we had a really good result at 13.75 per ounce gold. And anything above that is gravy as far as I'm concerned. We're not relying on a higher gold price to make the project work. At spot prices, it's a $300 million project, of course, and rising tides lift all boats. But we're focused on developing a high quality project. So we have high grades. The Hammerdown open pit measured and indicated grade is over 9 grams. So that's a pretty rare thing. We have an average life of mine grade through the PEA study of nearly 8 grams through the mill. So it is a high grade resource. We think we can, bolt on a low capital cost solution to give us that starter project that pays back the capital in maybe 1 to 2 years.
Okay.
So that
Have you done anything like this before in terms of a low capex startup type project? Because PEA is a plus or 30% in terms of the economics, obviously, but you're currently going through a feasibility. So where are you getting, again, the confidence from to think that you can deliver with a kind of low capex solution?
Yeah, I think the confidence comes from number one, the jurisdiction that we're in. So we're in the Baie mining district of Newfoundland. So it's a mining area. So we're not in a remote situation by any chance. We have fantastic local labor available, well-skilled individuals. We have services, suppliers, nearby road access, power lines. We're only a kilometer away from power. And the whole business plan for Hammerdown is to take an existing high-grade resource that's a brownfield site with veins exposed at surface, to send these veins to our sorting plant on site, remove the dilution as best we can, and truck the ore to a mill that's already there with the tailings pond that's already built and permitted. So that's why I think we can keep the capital costs low.
Okay, this is your pre-concentration process you're talking about, right? And so who owns the mill?
So the mill right now is owned by Rambler Metals and Mining. They're a UK copper company. So we came up with an agreement with them after our PEA in March that basically gives us about a year to evaluate the plant for use for Hammerdown. So we're just still doing some test work on that, to negotiate a purchase or some kind of a deal that would allow the ore from Hammerdown to go through the plant at Nugget Pond.
Right. So let's say Hammerdown kind of happens. Everything falls into place. The infrastructure and the low capex solution works for you. You produce cash, which you're then going to plow back into the ground. Is that right?
Yeah, that's right.
Right. So where's the value come from for shareholders?
So the value, I guess, for shareholders is this thing would spin off significant cash flow every year. We think that the value certainly would come from the fact that the additional deposits that we have in the area, we have 2 or 3 resource kind of potential deposits that should be developed as we get more drilling into them. This area really hasn't been explored well over the years. Just last week, we announced results from our new projects called Whisker Valley. We're seeing, 1 ounce material in veins in bedrock with significant copper and silver credits as well. So we think there's potential to grow our resources in this region to get to that 100,000 ounce a year production profile or more. With a 1 year payback roughly at these prices, I think it's a pretty compelling investment considering we're only sitting now at a 50 million market cap with 10 million in cash.
It's compelling, but the money's going straight back in the ground again. So its payback is quick, and then the cash is going back in the ground again. So that's what I'm asking about. How do shareholders benefit? I think your answer is we'll build up the resource and someone's going to be interested in that. And hopefully someone takes you out or the share price goes up. Or, these are things which, until, and beginning of this year didn't really matter. All of these catalysts didn't really matter. So why do you expect it to now?
Well, we think if you look at our, price to NAV ratio, we're on the very end of the low side. And I think that's the upside for us as we move into a producing company to get up to that, 0.5, 0.6, or even closer to 1 ratio where we should be as a producer. That's the re-rating that investors should look for. At the moment, we're on the very, very low side of where we should be.
But you and a bunch of other 100,000 ounces a year producers. I mean, I was just saying it's not hard to get a kind of peer analysis done for you guys because there's a lot of people operating at that level. Where's the real growth? Yep. Where's the real excitement come from? Where's the sex and the sizzle?
Mm-hmm. So 2 things. I think basically it's from our exploration potential. Richmont at the time when they were there looking at Hammerdown, they were mining these veins, right, trying to keep their mill going at a a $200 to $300 an ounce gold environment. And then they stepped away from it in 2004 and left it there. With gold prices the way they are now, we think there's potential all around Hammerdown. So it's a pure shadow of the headframe story. There's deposits that we have on site that haven't been fully explored, limited exploration below 250 meters anywhere on our project. So we think there's potential at depth as well. So we're working on that now. We've got 2 diamond drills turning at site right now. So we'll be drilling basically the rest of the year at Hammerdown with 2 drills searching for the other parts of Hammerdown or Hammerdown lookalike deposits. Hammerdown is very structurally kind of controlled. Dozens of veins have shown up at the connection of several different faults. We think that could repeat again along strike and also at depth. So that's where one of our major upsides will be if we are able to find a new deposit there at Hammerdown. The second one is this new Whisker Valley project, a brand new thing where we're finding high-grade veins that look like Hammerdown. It's early days yet, but so far so good. We're finding 1 ounce veins in bedrock. That's exciting, but more work to do. Yeah.
Okay, so you've raised about $12 million since May this year. How much cash have you got today?
So we're sitting right now at around 10 million in working capital.
Right, and that's going to take you out till when?
That'll take us through probably until next year this time. We're really well financed at the moment. So our focus is exploration, feasibility, and permitting. And that'll for those 3 things to happen over the next 12 months.
So what do you think? I mean, again, you've got to take advantage of this bull environment, haven't you? The money's being thrown around left, right, and centre. You've put doubled in price since June. It's great. Well done. But so have a lot of people, right? But nevertheless, a generalist money coming into this space. Surely you're not going to wait till this time next year to go and raise some capital. You've got to take advantage of the situation now. Why move so slowly? Why 2 drill bits? Why not more?
Well, actually, I don't think we're moving slowly at all. So we've just added a 3rd drill on Whisker Valley this week. So we have 3 drills running. They're going to be drilling all fall up until the end of the year. We're working already on our feasibility study, and we've already submitted our application for project permitting. That was project registration, which was submitted this summer. So really over the next 12 months, these are kind of the catalysts that we see for the company. Number 1 would be project permitting, which we hope to receive by this time next year. Number 2 would be the feasibility study. Feasibility study is important too, because that's the key you need for project financing. And so when we look to, I would say, probably spring of next year, we'll be looking at ways to raise the money to build the project.
Okay. It's the feasibility bit that I'm interested in, because it's like the proper economics start coming out and you start getting a sense of what it is. Because again, in terms of resources, it's not particularly big at the moment. I get you just started, right? And the process is to build that out more. But you've got to also be able to do it economically. So 100,000 a year, that's one target. What are the other targets you're going for?
For the feasibility study, and you're right, the PEA studies they're a snapshot in time, plus or minus 30%. It's just a scoping study to get you comfortable enough to move to the next step and spend some more money to de-risk the asset even more. One of the big things that we did this summer to support that was an infill and grade control program at Hammerdown. So we invested over 10,000 meters of drilling, very close space drilling, getting our drill spacing down to 12 meters or less in some cases. My experience as well, I was mining engineer at Placer Dome and I'm very used to narrow vein mining. And the more data you have, the better. So to support a good quality resource to go into feasibility, we invested 10,000 meters of infill and grade control work in the project. So that'll be the basis for an updated resource later this year. That forms the basis then for our mine planning and all of the capital estimation that'll come in the first half of next year. The same goes for metallurgical test work, more test work on the ore sorting. And people sometimes have questions about pre-concentration and the effectiveness of ore sorting. I can tell you that we need ore sorting to make this project work. It's a nice to have. So if you removed ore sorting from the PEA study completely and you just shipped run-of-mine ore, it's still a very attractive project. So I want to make sure that we don't rely on something brand new. The other thing I can say about sorting is that it works really well on the right kind of deposit, and Hammerdown is like that. So sorting on density by looking with X-rays for pyrite, very effective at doing the same test program that we did on Dalradian and have very similar results. So that seems to work really well. The other main thing on the feasibility that we want to look at, of course, is capital costs. So we're talking all the time with local contractors good pricing indoor designs. So we're doing all the work now to get ready for that feasibility with good quality information. That's the best thing you can do right now is de-risk, focus on the detail. We're not looking to sell the company. We're focused on just de-risking the asset. And if something happens and a bid comes in, we'll look at it. But I honestly think that's probably the right thing to do is just stick to your knitting, get the details done and dialed in so you're ready. Either go it alone or do something else if that opportunity is the right one.
Okay, so talking of managing your costs, I'm looking at the board and the management team. There's a lot of senior management involved with this. I mean, how many are paid and how many are actually doing the work?
So on the board, we have 3 other directors other than myself. So we have John Hayes, Peter Mercer, and Mark Ashcroft. So we have a small board fee for them annually. On the management team, we have 2 advisors as well, Jeremy and Eric. We have a CFO, corporate secretary, and now a new VP of Environment and Sustainability, right? And Tanya, our IR manager. Now we just added Perry Blanchard. He's our VP of Environment and Sustainability. We think that's a key hire for us. Perry will be in charge of all things health and safety, all things community, government relations, permitting, environment, sustainability. And he's a local resident of Kings Point. He's literally 5 minutes away from the project site and was formerly the manager of health and safety and environment at Crux and Lake Gold at Detour.
So why do you say that's important now? I mean, like I said, 3 months ago, you're a $25 million company. Why are you so concerned about ESG?
I think you have to be. If you think you're going to build this project, and we do, then I don't think you want to wait. I think the sooner we have someone in place for that, the better. That's my experience. It's never too early to. We already have a very good relationship with the local communities. I want to, make sure that is even strengthened further. Perry's a great hire. He's local. He knows the people. He knows the area. I think if you're going to go into a production decision here, you have to have that position in place. So he's actually the first, probably one of the first executives we've hired for the project. And that's how important we feel about ESG.
Okay. Are you, given all this money coming in, sometimes small companies get carried away. I mean, how do you continue to remunerate yourself? I mean, I'm sure you're like most CEOs that go, we're aligned with shareholders, but what does that actually mean? So how much do you pay yourself? Are you buying shares in the open market? What are the options you've got?
Yeah, so all that information is available on SEDI. We don't have a bonus plan. We have stock options. All management board have participated in the last 3 financings. I own 1.3 million shares myself. So if we're asking investors for their money, we want to put ours in too. Makes sense. So we haven't had any raises for anyone. It's been pretty steady since we joined.
Okay. So how do you differentiate yourself? I said at the beginning, I speak to so many companies and so many juniors under 50 million, all targeting the same things as you. So why you and not the 200 other companies pretty much saying the same thing all around the world?
Yeah, I hear that too a few times. I think the differentiating factors for us, several things. So one is grade. We have a very high grade deposit. It was mined once before. We have a process plant that we could use nearby. We're in a province that actually wants mining, which is really important. We're in great local support from our communities, and we have great support from our major shareholders. Dundee, Sprott, and 1832 are well-known investors. I think if you wrap it all up together, adding in the exploration potential that we have, now that we're well-financed, we're able to run with 3 drills, push ahead through feasibility and permitting in a province, again, that wants a mining investment. So it's not one thing, it's a collection of all of those. And a starter project that looks really attractive.
And you'll be in production soon.
Yep, that's correct. 2022.
2022. Okay. Garett, fine. That's a nice short introduction to the company. We've not heard the story before. I'm intrigued to see how you get on. What are the next sort of big moments we should be looking for?
But we'll have drill results coming out throughout the year. That'll certainly, with 3 drills, we'll probably have results coming every couple of weeks for the next several months. We're waiting as well for permitting decision on the project from the province, so that could be another catalyst. And I think we'll start having news out too on some more results on our test work that supports the feasibility.
Okay, I guess the permit and the feasibility study are the big ones, but I guess lots of small drill results coming out, hopefully high grade.
Yeah, well, it's going to be definitely shifting more from drilling for feasibility to drilling for exploration discovery right now. That's the recent change in our focus from the drill point of view. We're really branching out now and testing all of our targets that we've been working on for the past 2 years.
Okay, because I noticed like you're trying to compare yourself to what's been happening at Pure Gold. Some of the analysis Ascot, Battle North and Pure Gold seem to be your peers that you'd like people to think about you as being or potential of being. In what sort of time frame?
Well, if we can get Hammerdown up and running in 2 years, I think within the next 5, I'd like to be at 100,000 ounces or more, which would be a pure gold kind of type company. And it's kind of funny, Darren and I used to work together at Placer Dome, so we'd like to emulate the success that they have had, which has been really great. So, but Newfoundland is a special place. We have so much potential for new discovery there. It's been an area that's been really, I would say, well prospected but not well explored. So we're definitely interested in exploring there, adding to what we have, and if we can get Hammerdown off the ground, then I think for sure we'll have success to get over 100,000 ounces a year.
What sort of, sorry, I forgot to say, what sort of land package are you sitting on there at the moment? Is there scope for more?
It's huge. We have over, I think, 300 square kilometers of land. We have lots of land that we need, covering Hammerdown and Whisker Valley. So everything we need for our facilities, for our site plan for the mine, and a huge area to explore. So,
brilliant. Okay, stay in touch. We'll speak to you soon.
Okay, thank you very much.